Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Anna Kelly. And we are going to talk about Meta layoffs, not only Meta, but what else might be coming to technology, to finance, and what it might mean to you. How you doing, Anna?
I'm doing great. Good to be here with you today.
Oh, it's awesome. But I got to tell you, I'm having a little bit of flashbacks to other times, whether it be the dot-com crash, which I think is coming back to the Silicon Valley, the Great Recession for the financial world, right? You were at AIG at the time.
Hmm.
And we have been through some environments with mass layoffs. And if you haven't heard, Meta announced 13% or 11,000 layoffs this morning. I fear they won't be they're the first, but not the last major cuts coming. So I wanted to talk to you about the layoffs. What do you think they mean? Where do we go from here? How should people act? What do you think?
Sure. So I'm not shocked. I am a little surprised because Mark Zuckerberg's baby was Meta, right? This metaverse. And I actually, full disclosure, I own very little stock because I'm all in real estate for a reason, right? But I bought a little Meta earlier in the year. I was like, yeah, I'll buy a little bit. This metaverse seems a little interesting. And guess what it's done? It's completely tanked, and it's going to completely tank. And so Zuckerberg has given up the dream, right? Because the economy is just not giving him what he needs in order to do it. So I was surprised that he's laying off 11,000 people specific to Meta. But at the same time, Michael, we've been talking about this, right? When the Fed starts to fight inflation, they're going to create some pain for some time. They need to bring down wages, right? They don't want to say, we're going to cause you to lose your jobs and make less money. But they're basically telling you, we're going to create enough pain that people quit spending. We lower consumer confidence, and they're going to stop buying what? Discretionary stuff. They're going to keep buying food and housing and paying for energy and transportation. But discretionary stuff is what gets killed. And so jobs that are discretionary, such as those jobs, at Meta, are those that are going to be kind of the first shoes to drop. And I agree with you. I think that we're going to have similar to the dot-com bust, where we're seeing a lot of those tech companies that are kind of these big dreams for the future that are mostly funded by debt and private equity, but that aren't yet creating enough income to support the debt. Those are where we're going to see these big layoffs first. And I think Meta is just an example of that.
Yeah, when I look at what's coming, and again, it's one guy's opinion, it does feel very dot-com because I think this is going to be a very tech-dominated layoff stream. Because when you think about the real economy, I think the real economy, generally speaking, gets stronger from here. And I think the real economy picks up pieces from some of the tech layoffs, right? One of the things, because I live in the Valley and I've been here, I've seen this movie before, there's competition for talent. And Meta said, we overhired. Twitter,
Yeah.
Jack Dorsey, we overhired, right? They were all looking forward, losing money because there was this vision of growth and all of that. But what happens when Meta overhires and Google and Twitter is you're taking bodies or engineers or program or project managers or whatever from the real economy. The real economy needs these people too. They just can't afford them, right? OTEs,
Right.
on target earnings at Meta or Google are multiple six figures. You're not going to get that at pick a real economy company,
Right.
but they're going to pick up the pieces going forward. So again, I think this will be very much a tech/finance, because the other thing that I think is coming is finance is going to get smaller. We're talking big banks, right? Goldman's and
Yeah.
Cities and JP Morgan's, because it doesn't take as much money because nobody's going public. Yeah, there will eventually be some acquisition deals and private takeovers and stuff. You just need less people. I think there's a lot of industries that overhired. And Mark Zuckerberg said a couple of things that I wrote down. One, he assumed the pandemic revenue was permanent. How
Yeah.
many of us, like individually, had a good couple of years and just assumed that it was permanent? It's not, folks. It was all fake. There was $8 trillion created. You're not that good. And Mark Zuckerberg learned that lesson. And I wonder how many other companies, software companies, cloud companies, are
Yeah.
going to realize that, darn it, it's not real and going to have some cuts coming.
Yeah, I agree with you. And I think we're already starting to see that, in the financial sector as well. So, we've had layoffs from a bunch of big mortgage companies. Several large non-QM lenders have shut down funds in the last couple of days, right? And so you're seeing it in the financial side, you're going to see it in housing and builders, et cetera, and also in the tech side. And so, I think it fundamentally comes down to what's discretionary and what can people afford and what can they not afford. And so any company that most of their money is made and their earnings are made because people have discretionary income like they've had since the pandemic. Those are the companies that are going to start saying, people are starting to pull back. They're too tapped out. And I think over the winter, when you have a rise in energy prices, a rise in food prices, and you've got, housing continuing to become more and more unaffordable, I think that the American people are squeezed even harder. And I wouldn't be surprised if, Black Friday and Christmas shopping and earnings are down. You're just starting to kind of see the shoes drop of PE earnings coming in and more company missing target earnings, not hitting their numbers and saying, you know what, we have no choice now but to lay off. So I do think this is kind of the beginning, and there's a lot more to come, in my opinion.
And then if we were to bring this back to housing, because again, one of the things that I lived through, not only the dot-com crash and having to lay people off and that horrible experience, but our housing market essentially locked up. We did see some people that sold lower, prices went down a little bit, but essentially just nothing happened for like a year. So I think we're going to see some regional housing markets really hit hard by this. Also, I'm curious about the Zoom towns, right? One of the things that we happen to see is, like Twitter's a great example, right? Under past leadership, work from home, work from anywhere, blah, blah, blah. New leadership, nope, we want you back in the office. I don't think that'll be the last sudden pivot. And maybe we're going to see people boomerang and have to go back to the office, which will hurt some housing markets. What do you think?
Yeah, I absolutely agree. There's a lot of people that move to areas because of affordable housing because they could work from basically anywhere. And so I think when you look back at previous recessions, generally those markets that do really well are the ones, very highly populated, lots of physical jobs, companies that are still there. And there's more and more CEOs coming out and saying, you know what, this work from home is basically losing a whole bunch of productivity. So while we might have saved some money on office space and phone systems and that kind of thing, we're finding that people that are supposed to be working are, out at the beach and eating bonbons and sipping margaritas. They're not actually there. And so I don't remember the quote, but Elon Musk, when he just laid people off at Twitter, he's like, we're getting rid of all these, like, you get to have personal days and mental health days and all these things, because they're saying that they're finding that productivity is down and too many people are taking advantage of work from home. And so I think when companies have to start thinking about how do we cut costs, they look at those that they don't know whether they're there and fully productive or not. And they're saying, we want to have back the people that we know we can monitor. They're working hard. If we're going to trim fat, we're going to probably trim on those people that we can't really see and touch and control.
Well, I mean, let's just have a real adult conversation. You're a director or VP, you're looking at a spreadsheet of all the people under your org. If you have a choice to cut someone, is it going to be someone you see every day in the break room, or is it going to be see someone you talk to once a week on the phone?
Right.
Hey, you choose you. But having been in that situation, I can tell you which answer I chose. So it's going to be very interesting. This is just beginning. Meta. It's really interesting. I bought 60 shares of Meta, 40 and then 20. So two different tranches, one at 98, one at 91, I think. So I own a little bit too. How about that? Two people that don't own stocks actually own own the same one. That's kind of funny.
And we picked the wrong one at the wrong time, right?
Yeah, it's funny. Well, Anna, where can people find you?
Great. You can find me here every week and on our playlist on your channel. You can find me at social media at Anna Kelly, REI Mom. And if you're interested in real estate coaching or masterminds, you can find me at reimom.com.